So, welcome back everyone to episode 3 of WealthLab Strategy Trading. Robert Cohn here was just bemoaning his devastating loss in trade desk.
Well, it wasn't devastating, but it's quite painful. Well, painful loss, we'll call it that.
But was that a
Yeah.
strategy trade?
The strategy actually bought it today, but
Well,
no, that was
so
I had a position that I sell covered calls against each month, so I got taken back down on those shares, but that's all right,
yep, that happens.
it happens.
So yeah, I wanted to start with a question on the Patreon from Rainfield. All right, so he's asking a couple things. First, he's asking about Deterministic Knife Juggler, which is the strategy I released last time. So let me navigate to that. So one thing he was asking is if you run it consecutive times, you can get slightly different results. So here, 13.31 annualized. Now we get 13.13. So even though it's supposed to be deterministic, the results are still changing a little bit. So what do you guys think? Any ideas why that's happening?
What was the entry logic? Is it buying at limit or at transaction weight? Is the no? How do we call it now? Not transaction weight anymore. Got the name. Position size.
We call it transaction weight now.
Oh, we call it transaction weight now.
It used to be called position priority in WealthLab 6, right?
Yeah. So transaction weight.
Just as a side note, why did we change so many things in WealthLab 7? Everything is different than it used to be because it's a completely new code base that we wrote after Fidelity stopped offering WealthLab Pro. So we had to write the whole thing from scratch. So yeah, and we needed to kind of change things so it wasn't as similar.
Yeah. Yeah, so if you think it was painful to go from WealthLab 6 to WealthLab 7, it was a lot more painful for us.
Well, let's get back to the deterministic knife. Why are these results changing every time when it's supposed to be deterministic? Well, it's because every day it produces 6 buy signals, which are here in the signals, and if it already has a few open positions, so if it's already in the market, then if a few of these buy signals get filled, or all of them might get filled, it might not have enough capital to take all of the positions. So that's why each time it runs, these signals have a randomized weight here, as you can see. So, it might take different ones each time. The thinking is, why don't we weight them then with something? Well, because it's a limit order system and we don't know which of those signals are going to fill at what time during the day. So, one possible solution would be to use this granular processing here. So what this does is it can use intraday data to set the weight to the time that the price would have reached that level. But I didn't do that because it's using wealth data, NASDAQ 100, and there's a lot of delisted symbols in there. So we don't have intraday data for a lot of those delisted symbols. Plus, it's such a minor variance that it doesn't bother me kind of seeing that. So that's the reason why it's changing every time you run it. So one other thing that Rainfield mentioned, which is quite interesting, is he noticed in the code, so guys, close your eyes for a second. All right, so he noticed in the code that there is a commented out exit here. And he said, well, can I run it with both of these limit exits? So one is exiting on the high of the previous bar, one is exiting at the highest high of the past 2 bars. And you can't do that because if both of those limit orders are placed, WealthLab, and they both happen to be filled, WealthLab will randomly choose which one to take. So, we do have some logic built in. If you tell WealthLab that both of these signals are from the same position by adding a position code here, like such as this, to both of these. So by saying both of these belong to group one, basically. So now WealthLab knows that, okay, so, both of these belong to one position, so I'm going to use my short circuit logic and remove like the limit order that is higher up. So only the lower limit order will get filled. But when I coded this, I wasn't considering that because I know I'm only going to use the one exit. And if you build a strategy in building blocks, it will automatically put those group codes in there. So you never have to worry about it. But in a coded strategy, it could be something that you want to think about. If you're working with multiple exits for the same position, I mean, you might have a stop loss, or you might have a couple stop losses that you don't know what the levels are, so you can place both of those stop losses, and as long as you give it the same group code like I did, WealthLab will, like assuming it's a stop loss to sell, it'll only take the one that has a higher value. So you get the pessimistic result there. So one thing I wanted to do though is run this with the other exit, the highest two bars, and let's see how that affects the result. So it actually makes it more profitable. So the reason why I didn't trade that in production is because I like getting out quickly with this one, but it might be worth considering changing that exit. And yeah, we should think about it. And I know, yeah, I need to send both of you guys the strategies so you can, kind of tweak them and kind of contribute to making all of this better.
If you go to the metric report, I mean, the holding time, is it really increasing so much, or is it actually how many bars average holding time it is?
Average bars held. So positions, average bars
Yeah,
held is
4.25.
425. And if we use the previous version, it's 2.98. So yeah, of course it has a much shorter holding time, but it does produce, some better results. We might consider changing the exit. So we'll think about it and stay tuned for that, right?
Yeah. Well, I mean, there's a couple of other numbers you might want to look at, which is the profit per bar.
So let's see, the
think
average profit is 0.27 for the 1 day hold, 0.47 for the 2 day hold.
Put that in relation.
Yeah, we'll think about it. We'll think about changing that up.
Yeah.
Maybe we can even try it in the MetaStrategy at the end of the video, and let's take a quick look at how it changes the overall result. But I think we need to place the signals now, right? We wanted to show that.
Yeah.
So yeah, we're going to place the signals for today. So let me go to the strategy I'm using for placing the orders. So this is a version of the MetaStrategy that uses fixed value position sizing instead of percent of equity, so I don't have to worry about always changing the position size. I mean, what I might do is once we reach like every maybe 10% profit in the account, then maybe I'll increase this. So instead of 10,000, then I'll make it 11,000, something like that. So we'll do like a stepped increase in the position size. But so here's what I do every day. I just run this MetaStrategy, and we go to the signals. So here we have our signals, and let's select our broker, Alpaca. So we have, let me sort by MetaStrategy and then action. So we do have one position held in the Knife Juggler, and that's going to give a limit exit. We have a couple of exits from TXXX, which we'll talk about in a minute. We have an exit of QLD from Volcker's IBS strategy. And there's a video on our YouTube channel about that. We have a limit order exit to exit this TQQQ position from a genetic evolver strategy. And then we have the buys. So we've got the 6 buys for the knife juggler, and then we have 1 buy for the TXXX. So those are the signals. So I'm going to select all of them. Let's see. Let's place the orders. So here we go. We place the orders, and they wind up in WealthLab 8's order manager. And we see an error here. So we placed this sell for TQQQ for a position that we don't have in the Alpaca account because it was taken before we started tracking this in Alpaca. But you can see all the other ones are active. And if I go to Alpaca, so here is our Alpaca account. We picked a good time to start publishing the results. I'll say that. It would have been pretty demoralizing if the market started tanking right when we began this, but it's just the luck of the coin flip, right? Let's scroll down here and take a look at recent orders. So here we are. These are the orders that I just placed through WealthLab, and they are showing up here in Alpaca. We can see there's some old orders here that are filled. That's from yesterday, but all of these accepted orders are from what we just placed in WealthLab. So there we go. We've got the orders all placed within a few seconds using WealthLab right into Alpaca.
Deanne, can you check your signals page again? I wasn't sure if you really selected the top, the signal that was right on top. But back to your signals page on the MetaStrategy.
Okay.
The top.
Oh, I missed the accent.
Yeah, I mean, you could have hit the select all button.
Yeah, usually I hit select all, but
yeah, but I think you missed that one. Yeah.
We did this intentionally so we could show, how you would correct an issue like this. So yeah, let's just place the order, and there it is. Let's go back to our Alpaca page, and there it is. It appeared right on top. So very cool. So that's how I submit my orders every day, at least for this Alpaca account. For Fidelity, I go ahead and manually type them into their website because they do not allow connections using third-party tools. They're old school.
They were planning to do that.
But so, Deanne, can you see the Alpaca positions in WealthLab, like the actual account?
Of course. If you go to accounts, you're going to see. So yeah, you see a lot of our like dummy or kind of paper accounts that we use for development purposes. But yeah, here's our Alpaca, and let me hide these positions and show the Alpaca positions. There we are. And it even shows you the profit. So pretty cool.
Yeah.
So let's see. Our big loser is CDW, and our biggest winner is ARM. All right, so that's how I place the orders. And I guess we want to share one of the new strategies for folks here from the MetaStrategy. So let's go to, here's our backtesting version of the MetaStrategy, which uses percent of equity position sizing. And we have this one here, TXXX Deterministic. So it's like a variation of a strategy that Volcker published, which, correct me if I'm wrong, but it's loosely based on Trade Like a Hedge Fund by James L. Tucher.
Yeah, it's a variation like that. I mean, like everything, even if you see a clear strategy from me on the web or YouTube, anything, I always say adjust it to your trading style and find your own way around, because this is just an idea. It might not even be exactly what I would trade or trade. So yeah, it's just, and this is one of James Altucher's ideas, but I'm pretty sure it's I don't know what you have there, but it's been around for 20 years. I think it's amazingly good,
Well, look at that.
and
It's the number one contributor in this 3-year backtest slice.
it
So
wasn't
yeah,
it wasn't last time. I think
yeah,
it must
but
have.
because we're using a rolling 3-year
Yeah,
backtest window here in this 3-year setting,
yeah.
uh,
I can see that.
these contenders may shift up and down week to week, but currently it's number one. But my knife juggler is clawing back from that drawdown. Look at that,
Yeah, and I
that
mean,
orange one. Yeah.
these lines show exactly why this meta strategy is so powerful, because they sort of, you see when your knife juggler goes up, and down there is that the triple, no, the glitch indicator
hmm
system was going up as well, but some others were going down, so they complement each other. So that's good.
So what do you want to say about this TXXX? And maybe we'll run it in its own window here.
Well, I mean, it is said already in the, you have it in the book. And in fact, I used to have a book back there with from James Altucher, and he signed it. I don't know, with me traveling and living in different places, I must have left it somewhere. I don't know where it is, but Dion and I, we went to James Altucher to visit him down in New York. Do you remember, Dion?
Oh yeah,
And
yeah, that was interesting. I think he was living next to Hugh Jackman.
exactly, yeah. He said, "Oh, I meet Hugh Jackman up there in the." He had the rooftop apartment. He said, "Oh, he's my neighbor. We meet here at the rooftop," and so that was really interesting. He's a funny, nice guy. Let's put it this way.
Yeah, he was very nice to us, a very good host, and he wrote a good
Yeah,
book. Trade Like a Hedge Fund was pretty interesting, for the time.
I think there's some good strategies in it, and I think Robert, you coded another one, which seems to be also quite good. But this one is basically as it is. I think the problem that he had in the book and in the results is that he took the current Nasdaq 100 stocks, and obviously that improves the results. So you should always take our data at least,
Yeah,
or
he didn't.
Norgate data.
I don't think he accounted for survivorship bias, which is
It-
what WealthLab strives to do and what we try to communicate. And we have our wealth data sets uh, here. These data sets have built-in survivorship bias. So also, if you have Norgate data, that's another good source of survivorship bias-free data. And if you don't know what that means, search it up on our channel. We have a video about survivorship bias. But so here's your result over 10 years, 10% of equity position sizing. And
Yeah,
it's beating the SPY, which is always good to see.
yeah, and another thing that's always interesting is that once it starts getting a gap, and then it increases the distance, obviously. So it's really like holding on to it. And I don't know exactly what kind of code you have behind it. I know I have a variation that is definitely better than the one that James Altucher was using.
Mhm.
I'm not sure whether I gave that to you. I mean, I didn't
Yeah, I'm
hide
not
it
sure.
from you.
I'm going to send you what I have, and then,
Mm.
I'm going to send both of you all of these strategies so you can, kind of follow along and propose changes and things like that. And then you come back to me next week with, if you think there's a better version, we'll think about swapping them out.
Can we see some of the trades on the chart for that one?
Yeah.
And I
Always like
just
to see
remember
that.
something about this one, but that's
Hmm.
maybe a different story sometimes.
So here was a
That's
fortuitous entry.
Yeah, that's something that I would avoid.
You
You
wouldn't,
picked a very good entry,
yeah.
because that's something that I'm pretty sure out of my memory, I haven't looked at it for a long time. It would avoid that.
So what stock do you want to look at?
TTD, what is it? TD
The
Merit?
trade desk?
No, the trade
yeah.
desk.
I always like to look at the trade desk.
So here we got a nice 7.8% profit in a TTD, like right here in late 2024, and then we captured a 1.5%, and then just recently a nice 1.5% in a few days. So it looks like it's
Yep.
been doing good on TTD.
And it wasn't long on that very, very sad day.
Yep.
So that's good.
Look at that volume. Wow.
Yeah. Well, it got killed, man. I mean,
Yeah.
that's 35%.
But I mean, isn't that always been like
33%.
this? I mean, if you look at the long history, it goes up and then it goes down like in a day, 10, 20%. Out of my memory, I think there were a couple of, you see, there's another big gap here. Can you see
Oh,
that?
yeah. It'll fight back. They're a good company.
16%. Yeah, I mean, so it's not. I think that's the only other major gap down that I'm seeing is this one. Yeah, but could be a good entry point. We'll see.
Let's
But
wait
yeah, I
for
mean
Triple
that's
X
why
to
you
come
should
in.
never put, a large percentage of your capital into any one position or any one symbol.
Mhm.
So, typically I do 5%, maybe 10%, actually, and I think 5% is my highest. So that would have amounted to like what, like a 1% loss, something like that. Like what's 33% of 5%?
1.6?
1.5. Yeah.
Something like that. Yeah, so it's doesn't hurt that much when you look at it that way. Because yeah, when you're buying individual stocks, you have all kinds of gambles like that. All right, so we want to talk about anything else with TXXX?
No, I think it's a solid strategy that I also tested on the Australian stock market, with the Norgay data. But yeah, I like to use the Australian stock market for out of sample stock market testing. For some reason, um, it seems to be valid. And yeah, no, I think it's a strategy that your paid customers will enjoy.
All right, well,
Um,
let's do that. One last thing that I wanted to check out here. I want to run the MetaStrategy using this highest.
Before you run the meta strategy again, let me take a look at the drawdown curve as well, so that
Let me close a few windows here.
we don't see not only the good side but also the bad side if there is one. If you know what I mean.
Yeah.
Because
Well, I'm gonna
if you
keep this
okay.
window up, so yeah, we can compare it. And I'm gonna open this. So if I run this again, since I'm reloading it now, it should have the change that I put into the knife juggler.
With the extra 5% APR, that one should be way on top. I'm going to guess.
Well, we got an annualized of 28.2% compared to
20%.
Compared to 25.22. So here the final profit is like around, or the final equity is 392 for the original version. And
It's 21%. I mean, you can see it down there, right? 221.
it did have a substantial impact. Let's see, let's take a look at those profit curves. And look at that, it's now trouncing the
Yep.
TXXX. Sorry.
5% APR. That's a lot. extra that
Yeah,
way.
yeah,
It went
and
from,
you see,
13 to 18%?
interesting enough, I mean, it influences the result of all the other equity curves. And the interesting part is you see the TXXX, I guess it is the second one, and the glitch index, the third one. So they all, when they were going up, this, what is it called now, knife juggler, was still going down. It was still going down. So that's interesting.
Yeah, this, you're looking at kind of, are you looking at this section or this one here?
Yeah. No, the last one. Yeah. This, you see, this was going down from 30 to 40, I guess, and the other one was already going up there. And yeah, there's a couple of sessions where they were actually not going together. That's good. In general, it's good.
Well, yeah, I think I don't know, let's think about it over the weekend and decide, should we make this an actual change?
Yeah, yeah. I mean, it has some drawdowns in it.
Yeah, I mean, either way it does.
Mm.
Yeah, we wanted to look at the drawdown, right?
Yep.
So let's look at, so here's our, let's look at our maximum drawdown metrics report. So here the maximum drawdown is 9.26. And here the maximum drawdown is 8.84.
A little bit more.
So yeah, it added a little bit of drawdown, but I don't know.
For the profit,
Yeah.
it was what, 3% more APR?
Yeah, it added more profit than it added to the drawdown. Let's put it this way. Definitely, it's a huge improvement.
We're just talking about not even 0.5% of extra pain.
All right, we'll do it this way. Let the folks in the YouTube comments decide. Should we swap the exit out and go for the highest 2-day high exit instead of the one?
Yeah.
Post your answer in the comments below. Let us know what you think.
And say,
And
what
if
do you
nobody
think?
comments, then I'm going to decide. I'll make the decision. I'll probably do it.
Yeah, I think so.
Now you influence everyone. How can they go against the two of you?
We'll see. We'll see how it goes. All right. I think that's probably a wrap for today. Did we want to quickly talk about anything else? Volker, or VK, or Cone?
Well, just wanted to mention we got the Build 111 release out today, and we've got an update for the Alpaca provider that includes option trading now. So that's something new and interesting. So that we'll be able to incorporate options later.
Okay, that'll be
into this.
Yeah, gonna make me do option trading on Fidelity.
Gonna make you do it, yeah.
All right. Well, let's hear it. I'll prepare myself for that.
All right.
Okay. All right, everyone. Thanks for watching.
Okay.
And see you next time.
Thanks. Bye.
Bye.
Cheers.